Hello, everybody. This is Joseph P. Farrell, and we are live, hopefully, with news and views from the Nefarium on Thursday, September the 1st already. In 2016, the year has absolutely flown. It seems like just yesterday was New Year's. But anyway, as you can imagine, the Nefarium has been very, very busy, and there's a couple of stories that a lot of you shared, and I want to thank you for sharing this that really has me wondering just what the heck is going on. So this may be one of those cases where your guess is as good as mine, and there's a lot of those cases out there, believe me. But anyway, this is a case of your guess is as good as mine. There's two articles at Zero Hedge I want to talk about, and both of them are concerning Deutsche Bank, all right? And just to kind of set a brief background here, Deutsche Bank, as many of you know, is the most troubled bank in Europe. It's also one of the world's largest banks. But the reason that Deutsche Bank is so troubled is, first of all, they have an enormous amount of those credit default swaps and other derivatives on their books. And secondly, they're in trouble because of some of the things I'm going to talk about today. And I'm going to try and put this in as broad of a context as possible to explain my high-octane speculation as to what I think may be going on. And I want to stress may because, again, here, folks, your guess is as good as mine. But anyway, one article dated the 30th of August is titled Deutsche Bank. This is from Zero Hedge, by the way. Deutsche Bank calculates how much of the S&P's value is due to central banks. And I want to read just 3 paragraphs from this article, and you'll get the idea immediately of what's going on. This article states, it's no secret that earnings have gone nowhere over the past 2 years and are set to decline for 6 consecutive quarters, while on a GAAP basis, earnings as of 2015 were the lowest since 2010, which means that the earnings growth has not been a factor behind the stock market's recent ascent to all-time highs. As a result, the conventional explanation to justify the Standard & Poor's trading index just shy of 2,200 is that the market has been the beneficiary of unprecedented multiple expansion. To be sure, as Goldman recently opined, the median stock multiple has never been more overvalued. Indeed, if one left it at that, the answer would not be exactly wrong. However, there's one more factor which is rarely discussed and which, according to Deutsche Bank, explains virtually all of the entire equity rally of the past 4 years. The collapse of the equity risk premium as a result of plunging bond yields, which, as a reminder, is the direct pathway by which central banks operate by monetizing government and now, listen to that, and now corporate debt. I'm going to skip a paragraph here. Put in the simplest possible words, this means that the Fed is worried that once rates go up as a result of renormalization and the lack of a central bank to front run, stocks will crash. As it turns out, the Fed has ample reasons to be worried. All right, now I want you to tuck all that in the back of your mind, because what this article is based on is the fact that Deutsche Bank has just done a study of the valuations of the Standard & Poor's index and the valuations of stocks on the Standard & Poor's index, and it's found the whole thing wanting, and it's placing the blame on central bank action. In other words, the quantitative easing that's been bubbling the stock markets, all right? That's putting it very succinctly and probably a bit too crudely. But just tuck that in the back of your mind. This is Deutsche Bank saying this, okay? The bank that is up to its earlobes with bad paper in the form of all of those derivatives, all right? Now, let's turn to another article on September 1st, just 2 days later, also on Zero Hedge. And this article is a bit more lengthy. It's titled, Deutsche Bank Refuses Delivery of Physical Gold on Demand. And I want to read just a couple of very short paragraphs from this article. It's a rather extensive article. And then I'm going to get into what I think may be going on here. And again, your guess is as good as mine. All right. It starts out this way, quote, while the trading world was focused on the latest news involving Deutsche Bank, namely that the troubled German bank had been contemplating a merger with Germany's other mega bank, Commerzbank, as a part of a strategy to sell all or part of a key business to speed up its flagging overhaul. A more troubling report emerged in which a German gold analysis website, according to which Deutsche Bank was unable to satisfy a gold delivery request when asked to do so by a client of Germany's extra gold service. Now, it goes into a lengthy explanation of what the extra gold service is. It's simply a service where Germans can buy gold, and if necessary, if they want, they can demand physical delivery of the gold. And Deutsche Bank is the agent for this company, and Deutsche Bank has now refused physical delivery of a gold order. All right, now, skipping a little bit in this article, then we get to this. Deutsche Bank is involved as the fund's designated sponsor, which I just said. In other words, extra gold is an exchange-traded commodity which differentiates itself by, quote, representing that every gram of gold purchased electronically is backed by the same amount of physical gold, unquote, and its principal bank is none other than Deutsche Bank. And with Germans recently rushing to buy safes or find sound money alternatives in a country where the interest rate is negative, the ETC, that's the gold exchange company, it is not surprising that the population has flocked to its offering. Now, one final paragraph in this article. Barron writes that since Deutsche Bank is no longer serving the physical exercising of delivery request of extra gold is remarkable, as Deutsche Bank is, quote, the designated sponsor, as well as fiscal principal and redemption agent of extra gold according to its prospectus, and as the explainer of how to exercise physical gold delivery also reveals. Even if one is a customer of another bank, extra gold should, at least on paper, guarantee delivery by way of Deutsche Bank, as the Deutsche Börse Commodities explains in its process description for exercising units, unquote. So there you have it. Deutsche Bank has taken direct aim at the Standard & Poor's index valuations of stock prices and blamed it all on central banks, and now it's refusing physical delivery of gold for a company that it acts as agent for. All right, now, what's going on here? Well, I want to suggest to you that you have to view this in as broad a context as possible of other things that have been happening in the news, particularly in Europe. Now, I've already mentioned that Deutsche Bank, as we know, is the European bank that is most exposed to derivatives. This is the reason it's in the mess that it's in. But I also want you to view it in the context of all of those stories that we had beginning about 2 to 3 years ago, where Germany, a movement grew up in Germany, demanding that the German central bank, the Bundesbank, repatriate all of Germany's gold in the New York Federal Reserve, which amounted to about some 3,500 tons. That's Germany's total gold reserves, which supposedly are the second largest in the world. All right, and you'll recall that initially the Bundesbank refused to do so and then grudgingly gave in, and that the gold was beginning to trickle into Germany at a very, very small rate. In other words, the New York Fed, I strongly suspect, and many others, was a little bit hesitant to repatriate that gold. In other words, they may not have it, all right? Now, we know the stories about all of the Axis loot, the Japanese gold, and so on that have been circulating for years, that there's something very, very fishy going on in the world estimates of the amount of bullion in existence, all right? And in my opinion, that amount is badly obfuscated because there's more gold than people realize, and they've been using that to manipulate bullion prices, all right? Now, the third thing I want you to remember just happened, the Brexit vote. Britain voted to get out of the EU, all right? And now Prime Minister May, Princess Anne, and a number of British up-and-coming oligarchs have been invited by President Putin to Russia. So in other words, Britain has made a major break with the EU oligarchs, and I suspect quietly behind the scenes is rethinking the whole globalism project. That's another thing we might get into this coming week. But then the fourth thing that I want you to put this into context is just this last week, both France and Germany made it very clear to the United States that the TTIP agreement, that transatlantic trade and investment partnership agreement, which basically would have made Europe a permanent economic colony of American corporations, is dead. The Europeans are simply not going to sign it. So in other words, I suspect that that rejection alone means that the United States, that the Europeans are fearing some sort of financial and or other kind of retaliation against them for rejecting the TTIP. Right now, it's dead in the current round of negotiations. I suspect that what the Europeans are doing is they're waiting to find out who wins the American election and who they're going to have to deal with. It's not going to change much under Hillary Clinton. Donald Trump might be willing to renegotiate significant portions of that. We'll have to find out. But that's the other context I want you to put it in. Then finally, I want to have you recall two final points. Recently, Germany has decided to beef up its military, and in fact, triple the size of the German military, I think by about 2025. So in other words, about a decade, that they want to triple the size of the German military. And more recently, we've seen stories coming out of Germany, the German government advising Germans to stock up on necessities, food, water, things like that, and talk in Merkel's government of reintroducing conscription and being able to deploy the German military domestically in case of domestic violence. Now, everybody at that time said that they were suspecting that this was going to be in the form of some sort of Islamic terrorism. I'm suspecting that the German government is doing this because it is expecting some sort of retaliation from the United States, from the Western oligarchs, against their position on TTIP and then the gold repatriation. I'm suspecting that this is what's going on. Now, what I'm suggesting here is that these two Deutsche Bank stories have to be seen in this wider geopolitical context. And what I'm suggesting is that this is a significant indicator, in my opinion, and again, this is a guess here, folks. I'm reading tea leaves, and your guess is as good as mine. But my guess here is that these indicators from Deutsche Bank, and in the context of the wider indicators of what we've seen happening in Germany, coming out of the German government, the French-German rejection of the TTIP agreement in the current round of negotiations, I suspect that what you're witnessing behind the scenes is what I've been arguing has been happening really since 9/11, and more importantly, since the bailout in 2008 and 2009, and that is factional infighting in the Mr. Global community. And I suspect that the infighting is also going to take the form of a philosophical debate now between globalists who realize that they've been on the wrong path and they've got to do something to re-inject an element of nationalism and national regulation into the equation, because their other policies, unbridled free trade for the globalists, is coming to a head. I suspect Europe is seeing the handwriting on the wall here, in other words. Now, there's a final thing I'm suspecting is going on here. Deutsche Bank may be refusing those physical deliveries of gold because that German gold repatriation effort is simply going to fizzle. And if that's the case, then that means that the Bundesbank and the German government can have no more faith or trust in the Federal Reserve Bank as a depository for gold reserves. And that's significant if that's true. And what that means is, again, you have yet another indicator of all of this factional infighting going on at a very deep level. So that's my guess here of what's going on. This may be or may not be, but my suspicion is this is a huge and significant story. We all know that Deutsche Bank is a bank that is deeply troubled. It's in trouble, and now it's firing back, it looks to me. So there's something going on here behind the scenes, in my estimation, and it has huge, sweeping geopolitical consequences. Anyway, that's it for today's news and views. I'll see you on the flip side, and bye-bye, and God bless everybody.